depends on how you're trading, you know. So I'll give you an example. It depends on how you're trading. If you're trading super momentum based, or let me even see if I can. Let me see if I have a report of some sort that I can use as an example. Okay, let's do a little bit of, I don't have one for crude oil because I don't very much in this, but I'm just going to use this. So our official, I'm going to say our official anniversary date is 9/9. 9/9. And that'll be easy for me to remember. 9/9 is our official deciversary. Okay, let's play around a little here. Okay, so check this out. This is what this world looks like. This is a NASDAQ. Okay, NASDAQ 1616 chart. Okay, and I have a break even on here, so I'll take that off now. And so when I look at these numbers right here, I go 36, 48, 58. Okay, those are each getting a little bigger, and so so that tells me that this strategy works out to as much as what, 3 bars. Yeah, 3 bars, 16, 32, 48. And I have this initial stop loss set at 50. What happens if I set that to 32? Yeah, okay. Now, our overall win percentage is 77. Let's look at it on the aggregate stats. My win-loss ratio is 120, yeah, and the 67% win rate overall, okay? But I'm going to go change this to 32. Yeah, we're going to change to 32. Now it takes me to 114 and 65. Not a whole heck of a lot of change. Yeah, not a whole heck of a lot of change. Changing it to 32. Yeah. So I could have set it to 50. And it didn't really change that much. You know. Was it 10, 10, 4, 10? Okay, I'll go 50, 13. Okay, so it's more. It's more. But let's say I didn't want to go through the emotional strain of that. I might choose to cut it. What if I put this guy at like 16? What's going to happen then? Well, shoot, man, that hardly changed that at all from the 32 or whatever. Yeah, hardly changed it at all. Yeah, let's go over here. Well, 16 tick stop. That's 1 bar. Okay. I think I was talking about this yesterday. Look what happens to that win-loss ratio when you do that. But so that skyrockets, and that goes to 56. I lost about 10% there. Oh. So I don't want to take that any lower than that, really. 16, because that's 1 bar. Yeah. What if I clamp that? So I'll look at this. So I go 25, 43, 45. Well, I might choose not to wait out that third target if the second one's giving me almost as much. Oh, could take that down and bump that guy up if I'm going to trade 3 lot. Now, why don't I do that? Because I like to manually manage that one. And so that's why, at least for me, I leave it like that. But what would happen if I did do that? Yeah, well, it's just going to be roughly the same. They're going to lose a couple $100. So I like to leave that one there, even though I know it's not as good, and I know it's not quite as good. So depending on the circumstance, I'm going to manually manage that third one. Yeah, manage that third one. Okay, and I got a 16 tick stop. Span in here, intrabar anomaly situation again. You know. What's an X function like? So between a 16 tick stop, a 32 tick stop, and a 50 tick stop, what was the difference here? The difference was what it feels like mostly. Yeah, mostly. Does that make sense? I'm not sure what you're asking Mike. So basically what this comes down to is 50 tick stop, 32 tick stop, 16 tick stop, no substantial statistical difference. So what we're doing right here is we're exploring what this whole thing might feel like when you're actually doing it in different broad stroke kinds of ways. Yeah, does that make sense? When your system's making 10 times what you need in a day, yeah. Let's say you were gold trading. I call it gold trading now. Those gold traders like, well, if I could just make 1,000 a day, yeah, because I don't want to sit here all day. For sure, I don't. Yeah, Mike's good at it. 16-16 is going to give me a even ratio, 1-to-1. Yeah, and what's the wins percent that I might get there? Like 71. Yeah, I was like, whoa, 71, $6,000 expectancy, $100. Yeah, and you're in and out. What's the average time in trade? Average time in trade, 0.1 minutes. 0.1 minutes. Yeah. What is that? It's a lifestyle choice. So we get in and out, in and out. Right? Yeah, 1-to-1. That's what we expect. 16 tick stop, 16 tick target, 70%. That's a super system right there. Yeah. If you think you could go to Vegas and get anything even remotely close to this, ain't gonna happen. Average winning trade 240, average losing trade 240. Then then you ask yourself the question: can I handle? Yeah, I have no interest whatsoever in gambling on a casino, and the noise of it drives me insane, and the smell of it drives me insane. Don't want anything to do with it. This is much more fun, much more lucrative. The distributions are so skewed in your favor compared to a casino. Casinos, you could go into a drawdown that would last years because you're so close to the middle of the curve. So this would be a lifestyle choice. So I'm like, okay, let's say I wanted to see, well, could I get this done? Could I get this done? In the first, what would happen if I want to see if I can get this done between 6:30 a.m. and 8:30 a.m. My time. Let's see what would happen. Holy moly, look at that. During the range expansion period of the day, it just bumped me to 84%. This is a super system. What's that tell me? It tells me that most of the time that I spent after the first 2 hours was a waste. Look, my expectancy went up 1.6x. Yeah, but you just sit here and you play with these numbers, and you're not playing with the numbers because you think it's real. You're playing with the numbers because you're going, that's what my life would be like. Yeah. Yeah. So there's no reason to trade past the first couple hours based on this. So I could go in and I could narrow it down more. I'm not going to take a bunch of time doing that. But this is the kind of world that you might project yourself into. That's insane, 84% 1-to-1. No. Just cuts it off. No. Now, I will also tell you that this parsing out, especially when you first start learning, this parsing out in time is a huge game changer for most people. Why? Because it's easy to lose perspective about what you're really doing. Because the fact of the matter is, for most people, even for me these days, where I'm not putting 3 kids through college at 50 grand a year each, you know, all at the same time. Yeah. You start talking about that, you got to be pulling down some cash. Yeah. But even now, you know, in this big house and all this stuff, I could probably, I'd have to ask, because I don't do any of that kind of stuff, but you know, probably, you know, $600 would be entirely okay for me. Yeah, somewhere in there, at least as a break even. Yeah. So that's another way you put it into perspective. You go, well, how much do I, you know, how much do I need to live? You know, well, for a lot of people, I mean, you live in Alabama or something, you know, it's like a couple $100 a day. I have a guy that got a trade entry assist a few days ago, and he came to me and he said, you know, just in the last couple of days, he said, I was struggling. And he said, when I decided I was only going to make $200 a day, everything changed. Everything changed. Yeah. They got trade entry assist, and they're going to trade to 200, and he's done. Yeah. What does that do? It compartmentalizes the psychology. Yeah. Everything changes when you approach your reality that way. Why? Because most people don't know when they're done. Yeah. In NLP, we call it an evidence procedure. You're defining when you will be finished. Now, you can actually stagger that. You can say, well, and I'm suggesting this to start, and then when you become an old timer like Mike's actually only 23 years old, but when you have been doing it for a while, then you can say, I can trade into these different times of the day, but you also understand that the context is changing. Yeah. Yeah. What might this thing look like? Let's go into the advanced options, and instead of doing let's say 8:30, let's say I'm going to trade 9 o'clock to 11:30. Let's see what happens if we do that. Did it recalc? I think it did. Yeah. You want to trade during that time of the day? Yeah. See what happens here? Yeah. Yeah. It's a mess. Right? It's a mess. Now, so you might ask yourself, well, exactly how does it change? What if I go back to like a 50 tick stop? It's not going to be like that. Yeah. See? whole scale of it changes. Everything changes. In fact, it goes way up. So you need a bigger stop later in the day. What's that mean? It means the market's directional early in the day during the range expansion period of the day. And then it becomes loosey-goosey a little bit more as you go. You know? Yeah. So it's not that you can't trade that. It's just you're trading for a different scenario. Yeah. You're trading for a different. I didn't have one of these for CL. So I used this because I knew I had it. Yeah. So, what stop size do you use? I don't care. Yeah, I'm not saying that to be dismissive. I'm saying it because that's a choice that you make. Yeah, it's a choice that you make. But in the grand scheme of things, if you have something that has a reasonably high win percentage, then none of it's an issue. That's why I tell you, focus on win percent first, win-loss ratio second. If you're a new trader, that's generally going to involve something like a little bit bigger stops. Yeah, and then after you've taken a few hundred trades and it looks like it's working, then ask me. Yeah. But to say 16 or 20 on which of those APMs doesn't really matter. But I don't like to set a stop so close because it makes me nervous that it's going to get hit. Usually it goes right back the other way, right? Unless your stop has a reason. So this is why a guy like Michael say, well, so like 24, 25 tick stop. If I need to reverse, I will. If I'm getting a signal in the opposite direction. Why is the stop there? In case the market makes a crazy abrupt movement and just takes you out. Yeah. But your trading and your entry and your exit should be based on something that actually makes sense and not some arbitrary number. No, not some arbitrary number. So what's a stop? It's something that I use to keep me from losing too much too fast. So, any other questions, guys? Right, matching your trading to your personality. That's what we're talking about here. That is so huge. It is so huge. I cannot stress. From the impression that I get the way Mike trades, he is a little more loosey-goosey than I might be. Yeah, it took him a long time to find that. When we first started in the room, he was trading pretty small, and it took him actually quite a few years to start expanding that. And that expansion particularly became possible when he started taking some off and getting to a break even and using that two-tiered approach. Yeah, I love it. If you're going to trade like you trade a 3 lot, you take a couple off, and then the third lot makes more than the first 2 did. That's what I like. Yeah, trade markers. Okay, let me tell you what trade markers is. Yeah, I know it's expensive, but when you look at the capabilities in this thing, it's utterly insane. This thing is a huge game changer. Huge game changer. No, huge game changer. What's cool about it is you can just send somebody any. You can import stuff from Bloodhound and stuff. You can save your tests, and you can share it with people anywhere on the globe. You can look at it by period. You look at it. See, we could have also looked at this by half hour of the day. Let's go back to the. It just goes on and on. But this thing is so powerful, guys. So powerful. Where were we here? Oh, broke down periods. Yeah. So you can see that first couple hours has the better action. I just arbitrarily chose this chunk. You know, actually, that first well, actually, the first one should have been there. Yeah. So could you trade the first hour and a half and make a living? You should be able to. You should be able to. NinjaTrader. Personally, I don't. There was a time at which Rhythmic might have been a great data feed. We have more problems with Rhythmic than anything, and we had just as an insider, I'm not making a public statement. This is off the record. Joel Robbins asked me to start a futures auto trading, and a couple of years ago, I won't get into the details of that, but we were using Rhythmic's trade copying backbone, because Rhythmic is such a great company and so reliable and everything else. It became an absolute nightmare. The thing was, it had taken trades in people's accounts, and they'd end up being short when the system was flat, and they'd end up being long when it was short, and every which way. And then finally the broker said, we can't do this any longer. And I threw like 10 grand